I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
Hi everyone, welcome back to Be Rich. As you've been following me, some of you on Instagram, and we've been having this 52-week challenge where we are doing this challenge together where we're trying to learn how to evaluate stocks and create our own patas list, as we all like to call it. And the point of that program is that we try and learn how to do fundamental analysis on a very beginner level and try to see stocks and companies which we like and analyze them and see, are their price point, are they in value, or is it a great company to invest? And in that process, in the challenge, we've been talking about various topics. The first one was price to earnings, which I had brought Anand in last time, and we've spoken about price to earnings and how it works. And the next one which we are talking about is something to do with price to cash flow ratio. And in that community, it asked me some great questions, and I thought I'll sit and answer them, some of them at least, and try to get through them. So without wasting any more further time, let me dive into it. What is price to cash flow ratio first? So what is price to cash flow ratio? Well, price to cash flow ratio is much like price to earnings ratio, but it's slightly different. The thing about earnings is earnings can be worked upon, manipulated, and cooked up a little bit. But in a company, cash flow is something which is even harder to manipulate and kind of make it look, gloss it up and make it look nice. So price to cash flow kind of gives you a deeper insight into what is really happening. Is the company creating cash? And then if it is creating cash, how is it creating this cash, and where is this cash coming from, and what is it doing with the cash? And this is a great ratio to look at. But keep in mind, this is not something like price to earnings where you can have a quick look at this ratio and say, yes, it is right now undervalued. Oh, yes, it is overvalued. Market is paying too much for it. There's more to this than meets the eye, and you have to pay further attention to the company itself. So it gets into another layer of analysis more than just looking at the price to earnings and saying, yeah, it's a bargain, it's not a bargain. So let me get that out of the way. It's not easy as just, a lot of you have been asking me, the first few questions are like, sir, what number should it be? What number is considered good? Well, there is no real number like what can it be if it should be good. Because one of the questions that was first asked is, can this ratio be negative? Yes, it can be negative. Specifically, a great example would be, which I spoke in the group community, was a company like Amazon. Any startup company which is up and coming, we don't see companies like this much nowadays because thanks to angel investors and venture capitalists who step in and they start funding these companies from the get-go, so they don't reach the public too often. But there are companies way back in the early days, before venture capitalism, before angel investors, when companies would approach the public and become shareholders from the early stages of the company, and the company is growing from rock bottom to reach the heights of success. You'll see in the initial stages, the company taking a lot of its cash and spending it, and it's pumping, taking in more borrowing cash, and it's spending cash. And if those spending turns out more, the net cash flow can turn negative, and the company is spending more than it's earning, and it is necessary. You can see in the case of Amazon, where it was doing this for a very long period of time, and now it's turned very profitable, and it's one of the companies which a lot of people wish they had bought a long time ago. So that's the case in point. So that was just like a general example I wanted to give about how price to cash flow can be looked at and analyzed. One of the questions, now I'm going to look down and read some of the questions which I got. I understand the importance of cash flow, but how does price to cash flow matter? Well, like I said, price to cash flow kind of gives you an insight. Because when you start calculating price to cash flow, you have to really dive into the balance sheet. You have to go into the balance sheet and see the cash flow statement. And why do we look at the cash flow statement? Cash flow statement is looking at someone's bank account. Someone wants to borrow money from you and you say, okay, show me your bank. One of us wants to borrow money. They ask you to give a bank statement for 6 months. They ask you to give a bank statement for 1 year. Why do they ask? Because they want to look into your bank statement and see, do you have any existing loans? How are you treating your money? Are you getting a salary? You're claiming to getting a salary. Is it coming every month? They want to do those checks to make sure what you say is true. That is what a cash flow statement does. So when you go into something like ITC and you look into those, they have 3 major categories. Some of you are feeling lazy, can use Screener. Screener I would not use if you want to be a serious investor. I would strongly advise you to go read the balance sheet. Initially, yes, it will be hard. I'm not denying it. But like you saw Arun in the podcast, who's been learning with me, he's been improving and he's come leaps and bounds and he's gaining in confidence and he's able to look at balance sheets and point things out which even I didn't notice first. So there is hope for all of us if we decide to open the balance sheet. But if you're feeling a little lazy or you're feeling a little nervous, you can use Screener. In Screener, you'll find 3 categories under ITC because a lot of you have said, can you talk about it looking at ITC? So with respect to ITC, you'll find operating activities and you'll have cash from investing activities and cash from financial activities. And the one which we want to focus our attention is cash from operating activities. Operating activities is the cash which is actually generated by the company from actually selling and making things and selling them. So we'll directly know from that what are the payables, what are the receivables, how much inventory is sitting, and these are the basic terms of any company like ITC which is trading in manufactured goods. That means they manufacture something, they store it in a warehouse, then they ship it to dealers. So then the dealers in turn keep it in the shops, and in the shops customers come and buy it. So you'll have various levels of inventory stored. You'll have receivables, meaning the company would have given it to the dealer has to pay them in return, the distributor has to pay them in return. So all these things are there. So it kind of gives you a broad understanding on how does ITC actually make its money, which as an investor is a wonderful thing to know how does this business work, how is this business structured. So this starts getting interesting, and that is why I say understanding cash flow and price to cash flow is important, because it kind of gives you insight in, okay, how is this guy making his money? What is he selling? Where is he selling it? And is it really that much profit he's making? So this is why I say it is important and you should look into it. So for in the case of ITC, if you see their cash flow statement, it is standing at 17,179 crores. And the amount of shares which are there in the market which are being traded is 1,250 crores. So if you divide those two, you'll get around cash flow per share at 13.7 is the ratio, right? 13.7, and you take the price of ITC, which is 515, and divided by 13.7, you will come around to a number around 37. That is the number which we have for ITC and price to cash flow ratio. Now, immediately, a lot of you will be wondering, okay, sir, so does that mean I should buy ITC or should I not buy ITC? Well, it's not as simple as that, because what it tells you is, it gives you a general overview of what is happening with ITC in terms of market evaluation with the kind of money it is generating. If you remember, Shashwat was talking about why Warren Buffett likes Apple so much. Because Apple is spewing cash. If you remember that video, if you have not seen that video, go dig it up in the catalog and look at it, where Shashwat talks about Apple and why Apple is so great, because they generate so much of free float, cash, so much of cash. So if the component, the denominator, which is cash per share, is high and the price is low, that means the market is undervaluing this company, right? So what is a low number will be the question. And here it gets tricky because each company, each sector, each area is different. So I don't want to say this is a number you should look at, because then tendency is we form a bias and then we stick to it. But usually anything which is below 15 is good. So then immediately a mind will say, that means you're saying ITC is expensive? No. There's another reason why it could be expensive, because market could see that ITC is growing, that ITC is going to create more cash flow which is coming. Like Anand spoke in a video, I think it was in Tamil or in English, where he spoke about ITC. No, it was in PE, last PE video which we did, where he talks about comparing the PE of ITC and comparing it with Tamaraj batteries. So it kind of gives you an idea, because as an investor, you say, yes, it is here, but ITC is going to grow. They're exporting, they're expanding. That means the cash is going to increase. So market is factoring that in and is raising the price. So this is the way you have to analyze it and look at it. So your immediate question might be, then why are you talking about price to cash flow? If I cannot use it as a number or a metric, then immediately I cannot analyze it and just like say, okay, it is undervalued, or tick a box saying it's overvalued and just start buying it. The reason why I'm asking you to look at it is because I want you to get into the habit of actually deep diving and looking at cash flow statements. I want you to understand the businesses you're buying and what kind of a business is it? How are they making their money? So that is the main motivation for me to make you look into cash flow statements and look into this ratio. The other important thing to look at. So anything, like I said, if it's 10 and below, and I mean the cash is good, there's a lot of cash, that means the ratio of the market is undervaluing the stock, and you can tick it off if you want. If you really want numbers to look at, that is what I would say. Anything 10 and below would be potential for further investigation, as they would say. And if it's around 10 to 15, it's considered at good value, at good price. And if it goes beyond 20, that means maybe the market is expecting high growth to be there in this company in the coming future, and it warrants further investigation. So if any way you look at it, it's not a bad thing. There is no number or a ratio in cash flow which is bad. Even negative cash flow, like I said in the start of the video, can be considered something to worthwhile investigating and looking deeper into. So broadly speaking, to kind of sum this all up, so price to cash flow is another ratio like price to earnings to look and study. And how do you get this? You get this by taking the current price of the share divided by cash flow per share. How do you get cash flow per share? You take the operating cash flow from the balance sheet and you divide it by the number of shares which are there in the market, and then you receive cash flow per share, and take that, use the price and divide that with this, and you'll reach a ratio number. And what does that ratio number mean? Broadly speaking, if it's below 10, that means the company is probably a bargain right now. You can definitely continue investigating this further. If it is between 10 and 15, the price is about right, where the market is looking at as far as cash flow is concerned, the price is about right. And if it's at about 20, that means maybe there is future growth in this company, which the market is factoring in, pushing the price to this level. So this is the way you can look at it to analyze. So I would definitely be talking more about this in our group, in our community, where I'll try and answer some more questions in more detail. I don't want to take up any more time on this video as I've already run the clock. And if I tend to rattle on and on, I'm sure I'd rather get very boring. And I've been told, even in the community, sir, don't give too much information in one day. So I'll try and cut it off here. And I'm sure a lot of you have further questions about price to cash flow ratio. Please put it down in the comments down below. And Rupesh will definitely pass these questions on to me, and I'll try and answer them. And if you'd like Anand to come and talk about this, or somebody else to talk more about this, I'll try and get some more people to come and talk about this specific topic. Other than that, I do wish you a wonderful weekend. I think it's a Friday by the time Rupesh gets this video out. Have a wonderful weekend. Those of you who have a long weekend, have a great long weekend. And I'll see you in the next video soon. Thank you for watching Be Rich today.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.